Hello, hello students. Today we are going to discuss about ulip. What is ulip? Ulip is an unit-linked insurance plan. It is like share market or stocks, which is handled by LIC. Normal share market is handled by SEBI, but ulip is handled by LIC. It is equity fund, and this fund invests major portion of the money in equity and equity-related instruments. And it is debt fund, balanced fund, money market fund. This fund invests major portion money in government bonds, corporate bonds and fixed deposits. And this fund is ULIP fund is a mix. This fund invests money of equity in debt in instruments and mainly as treasury bills. And next, for ULIP, we get certificates of deposit and commercial paper, and there will be 5 years lock period in which 4 times in these 5 years we can switch the account, but for every transaction the charge will be 100 rupees and switch before 3 p.m. This is like intraday trading. Intraday trading and riders. There are different types of riders in insurance. Accidental death benefit. It is an additional benefit paid to the policyholder in the event of his death due to an accident. If a policyholder is died because of an accident, then additional benefit is paid to the policyholder, to the family. And next, accidental death benefit and disability benefit. This is next is disability benefit. If additional benefit paid to the policyholder in the event of death due to an accident, the later one is paid if the insured dies or loses limbs or sight in the accident or being afflicted with a disability. Suppose a person is injured and his one of his legs or hands or any eye, any part of his body is injured and removed, then the person is named as disability. Then the benefit is given to the person because of his disability. And critical illness rider. Critical illness rider is the person receive financial benefits on being diagnosed with the critical illness. The person is diagnosed with critical illness like cancer, HIV, or heart problems or paralysis, then the benefit is given to the person for the treatment purpose. And next, offers income to nominee on the death of the life. The nominee is awarded with the money after the policyholder is died. Next, premium waiver benefit means waiver means exemption, means removing the premium. The policyholder is not required to pay future premiums on the policy in the event of an accident or mishap as defined by the rider. If term rider or critical illness rider or accidental death benefit and disability benefit, the premium is removed or waived off. There is no need to pay the premium by the policyholder. And there are different types of payment for the making payment for the insurance. That is, we can pay quarterly, means for 3 months, or monthly, 1 month, 3 months, 6 months, or 12 months. This is monthly, this is quarterly, this is half yearly, this is annually. And next, ENACH means National Automated Clearing House. It is deduction directly through the salary. If you are attaching your bank account to LIC policy, then monthly the amount premium will be deducted from the bank, just like EMI, on months of dates of 7th or 15th or 22 or 28. In these 4 days of month, the amount will be deducted. And grace period for every insurance, there will be a grace period, that is 30 days or 1 month, whichever is more, and no extra charges or late fee. After grace period, no risk coverage and defaulter for 6 months. There will be no risk coverage after grace period, that is 30 days, or we should pay, suppose our policy should be paid on 10th of every month. After 30 days, it means next month 20 till next month 20, there will be grace period. After these 30 days, there will be no grace period. After 6 months, if anybody doesn't pay premium after 6 months, the policy will get lapse. For revival in next 5 years, policy medical checkup required, that is free look-in period, also known as cooling off, that is 15 days after policy bond received. This is what is free look period. After issuing our bond, within 15 days, policy holder has a power to cancel the policy. So what is free look period? After getting policy bond received after 15 days, if the policy holder is not satisfied or else he want to cancel the policy, then he can cancel the policy within 15 days. There will be no extra charges for cancelling the policy within 15 days. There are different types of definitions, or else many terms we hear that we feel these are the new words in LIC. In insurance, there are many different kinds of terms that we are new to hear, but if you know the meaning of those words, it will be very easy to explain for any client or for any policy holder or in any meeting to other person. What are those? First one is actuaries. Actuaries means a person with expertise in field of economics. And bank assurance means selling insurance product through banks. Keyman insurance means taking a policy by company on life of another person who was or his employee connected to the business. And what is reinsurance? Where one entity takes on all and part of the risk covered under a policy issued by an insurance company. Nominee means who receives the death claim of a life assured. Appointee means a person who takes care of nominee. If the nominee is below 18 years, then a appointee is appointed to look after this nominee. And surrender. What is surrender? Cancelling the policy. Cancelling the policy is surrender. Surrender is applicable after only 2 years, and approximate 70% of paid premium is returned. And loan. If you paid 1 lakh of premium, 90,000 amount from your premium till now, you paid 1 lakh rupees, and you are eligible for the loan 90,000, that is 90% in 1 lakh. And there are different types of claims claiming the policy, that is survival benefit, maturity, permanent disability benefit, premium waiver benefit, surrender value death claim. These are all the different types of claims claiming the policy. What is a early death claim? Within 3 years, if a policy holder dies within 3 years, the claim is early claim. And but it should be considered as a doubtful case, because it might be a murder, or during policy they will say lies to policyholder that they are healthy. They might get a serious health issue which is not reported to the agent. And documents required is nominee statement, medical leave from office, hospital certificates, death certificate, policy bond, and know your customer credentials. If the policy case is suicide, then first case, if insured committed suicide within 1 year of having taken the policy, that no death claim will be paid. If 1 year, before 1 year, the policy holder died by suicide, then there will be no death claim will be paid. If insured committed suicide after 1 year, that is after 12 months 1 day, death claim will be paid. And if somebody policy holder is missing, then after 7 years you should wait, the nominee should wait till 7 years. Even though after 7 years the policyholder is not coming to his home, then file a FIR of missing, and premium will have to be deposited for 7 years. After 7 years, imaginary death certificate will be issued by the court. Then 100% amount is issued to the family. Thank you, and please like the ic38 solutions. If you like the video, subscribe and follow the channel for more updates.